IDFC, who joins in to wrap up the conference for us, the IDFC conference, and to, of course, tell us what the key takeaways have been this time around. Vikram, hi, good morning, and thanks for joining us. How has the conference shaped up this time? We've heard a lot of positive comments, but to summarize, what have the key takeaways been?
I think in general what I would say is that the conference has gone exceedingly well. We've had more than 200 corporates participating, more than 600 investors, over 8,000 meetings. So I think it's been very good from an interaction standpoint between corporates, research analysts and investors. I think some of the takeaways really are that corporates are cautiously optimistic. As you know, there are some signs of revival in the economy in a variety of areas, particularly on the construction side, given the road sector having kicked off, railways putting out contracts, and defense also seems to have a lot in the works. Rates have come off a little bit, and that's contributed to increase in margins. I think it's fair to say that the decline in commodity prices also fed into margins, and the full year impact of some of these things will be seen only in the following year. But there has already been an impact, a positive impact on margins, and I think it's my view that over the next 6 to 9 months there should be a pickup in growth, particularly given the increase in government spending and government investment that has been in the works for some time, should start feeding into growth numbers over the next 6 to 9 months. So overall, I think people are cautiously optimistic, and we should be able to see the results of government spending and investment over the next 6 months.
Hi Vikram, good morning and thanks for joining us.
Morning.
What do they mean when they say cautiously optimistic? When will this much awaited earnings recovery take place? In FY16, earnings have been progressively revised down. What are they now expecting in FY17?
I think, you know, overall GDP growth should come out at around 7%, and earnings growth should also be in this, you know, around the 7 to 10% range for FY17. That's on average, right? Obviously, some industries are doing a lot better than others. As you know, consumption spending has held up quite well, and that I think will continue to hold up well, also on account of some of the pay commission increases that have been announced. That will start feeding into spending as well. I think the two areas of the economy that really need to pick up for growth to step up in a more significant way is the rural economy and the investment cycle. And as I've said before, the private sector involvement in the investment cycle will probably take another, 18 months or so to get started. In the meantime, government spending and investment will kick in order to bridge that gap. And the rural economy also is not doing too well. That also should start picking up over the next 12 months to 18 months. So I think those two legs of the growth cycle need to pick up. The consumption side is still holding up okay. So it's a mixed bag in terms of how industries are affected in the near term. But over the medium term, I think people are optimistic that growth will pick up.
In your assessment, how much could consumption really pick up because of the, 7th Pay Commission recommendations? Because we were speaking with Morgan Stanley and they suggested that it could be as high as a $6 billion lift-off for consumption as a whole. What would your own assessment be?
I don't actually have a number in terms of what the multiplier effect of this could be, but I think it's fair to say that the increase is quite large, and when you look at the numbers in terms of what they mean from an absolute standpoint, they're fairly large numbers. So I certainly believe that this will have a positive impact on consumption-led spending.
Vikram, you all had a conversation with more than 600 investors. How are FIIs feeling about India? They've been selling in the cash market for the last 7 or 8 trading sessions. And even if you see India's performance vis-a-vis the global markets, we've underperformed the S&P by nearly 6%, China by nearly 15%, Nikkei we've underperformed the Korean market. How do they see India vis-a-vis the rest of the emerging as well as developed markets? And what are their expectations by way of a return from Indian equities in the next year?
It's obviously, since it's a market, you have various views that play into what the expectations are. I think it's fair to say that expectations have now corrected from what one could argue were unrealistic expectations, say 12 months ago. But that's not to say that people are not optimistic about the India growth story. I think it's more calibrated. I think they realize that things are taking a bit longer than what they would have expected. But it's fair to say that everything that at least we're hearing, and everything that investors, when they talk to various parts of the economy, whether it's corporates or government, what they're hearing is that there is a lot in the works that will start feeding into growth over the next 6 to 9 months. And so their expectation certainly is that growth will pick up going forward. But valuations are reflecting the underlying earnings growth, and that, as you rightly said, for FY16 has certainly been weaker than what people expected, and that will reflect in valuations. That doesn't indicate by any means their confidence in the future growth of the economy. And you've got to keep things in perspective. I mean, a 7% GDP growth relative to what's going on in most other parts of the world is a pretty healthy growth rate. And as government spending, investment and consumption picks up, I think that can only trend upwards.
Okay, by the way, just watch the market. The bank nifty is under quite a bit of pressure now. In fact, it's down 0.6%. The intraday chart should just come up for you. And a lot of big banks are, facing some cracks. So ICICI Bank, PNB, Axis Bank are all part of your top losers list right now. And that's actually dragging the market slower as well. It's not a big gash or anything, but the nifty is trading in the red, down about 0.2%. One final word before we let you go, Vikram. The Modi government has done quite a bit for the road sector in the last week or so, whether it's rebooting of the 34 stalled projects or whether it's segregation of the construction costs from civil costs, etc. Do you think this is enough, and what kind of growth do you forecast in the roads and the infrastructure sector now?
I'll make a broader point. I think what you've seen over the last week, 10 days, has been quite significant in terms of reforms. You first saw the liberalization from an FDI perspective in a variety of sectors, I think 15 sectors, including positive impact on certain sectors which are undergoing some stress and slowdown, such as the real estate sector. And as you know, the real estate sector, if it picks up, has a much broader impact on the economy. So that has been a positive. The second positive has been, as you rightly said, the reform surrounding the road sector. And that, as I said, roads is one large part of where we see growth in the next 6 to 9 months from a spending perspective and a construction perspective. The third thing is the DISCOM reform that was announced. That's also very significant. And I think all these things will feed into positive growth going forward. The last is, there's a bankruptcy code that the government's planning to introduce in the winter session of Parliament. That is again a significant piece of legislation which will give a lot of teeth to various parts of the landscape and will be quite instrumental in jump-starting the development of the bond market. So I think there has been a lot of reform that the government has announced, and I think that this should all be viewed as a positive.
Okay, Mr. Limaye, we'll leave it at that. Thanks so much for joining in. So that's how the IDFC conference went. By the way, it's not just banks, even pharmaceutical stocks, ex of Dr. Reddy's, are under pressure. So Sun Pharma's down more than 1.5%. Lupin has cracked nearly 1%. We'll slip into a very short break. We'll come back and get chatting with Sushil Kedia, the president of the Association of Technical Market Analysts, and he'll